It's been a little bit, Mark, since we did one of these.
We'll start again now every 2 weeks, won't we, Sean?
Yeah, I think so. But new year, new look for us. So we have a couple new things from the presentation, which everybody will see. And this episode is about the a kind of a thesis that we've been working on, Mark, for a little bit. We'll get into it a little bit later, but first, just want to welcome everybody back. If you haven't seen our series before, The Art of Law, we kind of talked a little bit about where China was, where it is, and where it is heading. And we have a link here on the top, which sends you to our YouTube page full of our previous videos. Everybody who signed up through the Eventbrite link will get a copy of this presentation. So everything will be clickable, and you can just click the link, or you can click Mark's email address down there on the bottom left and send him an email. But of course, if anyone has any questions, you could just put it in the chat. I do keep an eye on that. So if you have any questions, you can send it to the group chat, or you can send it to me directly, and I'll try to fit it in when at the appropriate time. But maybe we just get a little bit of house cleaning before we get into the meat of it. Mark, you're coming back to housekeeping.
Housekeeping, not housekeeping.
Yeah, spring cleaning. But you're coming back to Shanghai soon, or you're coming back to China soon. Is that right?
Yeah, well, I was trying to ask Gracie. So I've got a flight booked on the 10th of March. So I'm just hoping it'll be all okay. Obviously, there's disruptions in Europe at the moment. But yeah, and then I think it's 3 weeks quarantine this time. So lots of time to reflect on it.
Well, how long was it last time?
2 weeks. So.
Oh, all right. We're going to need to revisit. We did a video on quarantine. So if you want to, Mark, if you want to check that video out, it's on our YouTube channel. You can see all the tips and tricks for quarantine on there. All right. So just want to get that out, because if anyone is also in Shanghai, or Mark will be traveling all around. If you're in China in the next month, then yeah, feel free to send us a message. We can set up a meeting with Mark. All right. So, Mark, I think this has kind of been an idea that we've been playing around with for some time. It's kind of a very, I was thinking about it earlier today, and it's just a very complicated, I guess, domino effect type of theory that we are presenting here today. So I think we better take it step by step and just kind of first give some context on what is the first domino to fall, and then and as the presentation goes along, we kind of get into some of the after effects. But Mark, maybe you just want to give us a little bit of context on where we are with this theory.
Yeah, so I think the theory, it's going around in my head for like 20 years already, and it's probably come up recently again. And I think the whole issue is about all those China tech companies that set up these structures to list in the US. And this happened about 20 years ago, where it first started. And the reason was that maybe 20 years ago, most rich people in China were from the real estate sector. And then it started about 20 years ago, it was from the tech sector. But even like today, tech is one of the areas in China which is still sensitive and off limits to foreign investment. But on the other hand, these 20 years ago, those Chinese tech companies didn't have profits. They didn't meet the conservative requirements to list in China. So they had to set up an offshore structure. And so that was really the issue. The thing was, on the one hand, in order to list in the US, they had to be a foreign company. But to operate in China, they had to be a Chinese company. And so because of the restrictions, and they built up this thing. I know we'll go into it in a minute about the VIE, but now because of this US-China tension, which I still think probably will retreat a bit, but I think we had a trade war, but that didn't really go too off the rails. We had a technology where you see, even today, well, not today, but in the last few weeks, the US is continually adding more Chinese tech companies to blacklists, so they can't sell into China, into the US. But I don't think for those companies, the US was ever such a big market. So probably they're more concerned about Europe. So, this stuff is not good, but it hasn't been too, I imagine they'll work their way out. But I think what's going to be interesting is China now also. So on the one hand, the US has said that people have to lay bare their audit information if they're listing in the US. And a few weeks ago, they also now have circulated a questionnaire asking companies that have this VIE model to explain it. But I think the much bigger issue, because I think you can explain all these things and probably there'll be a workaround on the audit papers. But the bigger problem is the Chinese regulators, they don't really want companies that have lots and lots of data about Chinese citizens being listed overseas. And so I think, there's the crackdown on listed Chinese centric companies is not really right. I think the real issue is going to be for a lot of those companies, it's not going to be possible to list in the US. And so if you've invested in one of those companies, what do you do now?
Yeah, so I'll just move on to the next slide, but it is kind of a culmination of things, right? So there was this, like we talked about the trade war and the tensions, but then there was also that accounting standard, but then there's also this idea of like technology and privacy and, all this personal information that's quite sensitive. And how much what are the different, I guess, stakeholders have at stake essentially. So there is a kind of like this momentum, this wave that's coming, but we just don't know exactly how all the pieces will fall out. And that's what we're trying to do here today for this presentation, is kind of figure out, okay, we have all of these intersecting ideas and concepts, but what are the possible, ways that it could all fall into place? So maybe we'll just take one of each of these pieces step by step, Mark. I know you mentioned that there was this accounting requirements from the US to the Chinese publicly listed companies. Do you just want to give us a little bit of explanation on what is that requirement? And then we'll of course, get on to like the VIEs and all those other things.
Yeah. So I think, reasonably enough, the stock markets in the US, they want the financial audits of the Chinese companies to be reviewed because, obviously these Chinese tech companies, their biggest markets is China. But this is a dilemma because the Chinese regulations don't allow those working papers to be submitted overseas without special approvals. And so I think, for me, it's actually more of a surprise that the US hasn't been doing this for 30 years, because the stock market should really have an obligation to make sure that the companies that are being listed are transparent. And that's one of the issues which I'm really grappling with, is it seems to me, like, I don't know if you know what the Dunning-Kruger effect is, but the Dunning-Kruger effect is that something is so stupid you can't believe that people fall for it. I just wonder if this falls in the Dunning-Kruger effect, because really basically these whole structures are, a founder has an offshore structure, and that whole Chinese business is built around a company that he privately owns, which has the operational licenses. And so I think the stock markets, it's almost a surprise that they hadn't, checked this out beforehand. So that's so I often wonder, what am I missing? I mean, because a lot of very smart people have been doing this for 30 years, making a lot of money. I just wonder if at some stage it'll end up like Dutch tulips or something.
Well, the next slide here is on the structure, which I think we kind of simplified it here, but it does get quite complicated, and that could probably be one of the reasons, Mark, why they have never gotten around to actually looking at the accounting standards for this, especially like you said before. It's only relatively recently that a lot of the Chinese companies, the red chips that are listed, are actually becoming quite big components of the stock exchanges, right? So maybe before it wasn't necessarily such a priority, but I mean, are we there? Is it a priority now? I would think so. I mean, the market. I will get into some of the companies that are actually making up a lot of these red chips portions of the stock exchanges later. But maybe first we just talk about what is a red chip and what is a VIE and how does it all work?
Okay, well, it doesn't work. So basically, it was, like I said at the start, probably in the old days, I can't even remember if they did list these companies in the US, but if there was like a big real estate company or something like that, someone makes, sand shoes or, like a Anta or a Li Ning, they had businesses that weren't really restricted in China. So, they could set up an overseas company holding that business. They could list that, I guess. So the problem was, all these tech guys, have these businesses and they wanted to get foreign capital. And so what they would do, I think it's quite well set out there. They would then fold the business into the wholly foreign-owned entity, the WOFI, a online dating. I don't even know if you're allowed to do that. But anyway, let's just say there's an online dating app in China. So what you would do is you would have your business, and no doubt online dating would require all kinds of value-added telco licenses because it's like a social media thing. It's it's online, and it would also collect a lot of data. It would also collect probably biometric data and things like that. So that kind of business, there's so many issues for the wholly foreign-owned entity. It's very difficult. So they would set up this other company that's held by the founder, like Chinese citizens, and they would hold the operational licenses. And I guess, when they first set it up, the idea was that the wholly foreign-owned enterprise would get all the revenues, they'd hire all the people, and the PRC VIE entity would just be very small, just would hold the licenses. In reality, I think, especially before they get listed, so I'm really not talking about the big companies that are listed and all this kind of stuff, but I'm talking about more the companies that are in this growth phase. I think whenever I've seen these companies, and I've never been involved in the offshore aspects of them, but we've done due diligence on it in other cases, the VIE has all the people, all the IP, and all the operational licenses, and the WOFI really doesn't have much. And there's a contract. And so I think the thing is, we've had a good run, people have all made money, but now if they've lost this ability to list overseas, what does that mean? And also, we have to look at we don't have to, but I would think, one of the issues is, who are all the people that put this together? It's mostly American investment banks, American law firms, American accounting firms, and the Chinese lawyers, etc., had a limited role. So a lot of the safeguards are from a very American mindset, and I haven't really been convinced. So I'm hoping people can explain to me what the safeguards are. But what happens now if you can't list it? And I think we'll go through some of the options we see, but it's not what people invested in. People invested because they expected to go listing. And I guess, you could say some of the funds, they'll invest in 5 companies. And so if 2 get listed, that's good enough. But what happens if you invest in 5 of these kind of things and none of them get listed? What's the roadmap out of it? And the big difference in the last few months, because I've been thinking about this for a long time, I always thought it was going to be the Americans that really stop it, TikTok and all this kind of other stuff. But it's really now in the last few months when China's, placed much more emphasis on cybersecurity, but even more so on the data privacy. I think you can see the new regulations. If you've got more than 1 million data subjects, you will not be able to list unless you get a cybersecurity assessment by the CAC. And that is, any Chinese tech company that wants to list, 1 million would be nothing for them. If they don't have 1 million data subjects, what are they trying to do to list? So that's where I think is kind of the complexity.
Yeah. And also just the evolution of the law from a China perspective too. Back in the early days of when the VIEs were first coming out, the law, the legislation has changed so much since then. Even beyond that, there are also direct influence on how Chinese companies can list overseas, which we will touch on a little bit later with some specific regulations on that.
Yeah. So just like perhaps like to highlight it, I was looking online and I found a video from a US law firm talking about this topic from a few months ago. And it was kind of interesting for me that what they were saying is this is the great strength of this model is they constantly adjust the contract between the VIE and the WOFE. And I was just thinking, this isn't the issue. This really isn't the issue. The issue for me is really how fragile is that contract? So what happens if the founder at some stage doesn't see an alignment with those offshore investors? What do you do? And how do you stop that from him just taking all the business? So it's an interesting perception type of view. I guess some of the American stakeholders are saying, and they of course said, this is how you can make money. It's always that, where probably my mind, but they're saying, oh, you can do this. And so that's where there's, I think, a bit of a disconnect.
Yeah, I just highlighted there for people who are kind of getting lost that it's that it's kind of that whole red chip to the WOFE to the founder kind of line that we're talking about is how strong are those links? How strong are the links in that chain? And that's kind of there's a lot of forces at work pulling at them. So we'll see. So from the beginning, though, Mark, and it's hard to argue against that there have been some successes for this model. So there's a lot of incentive for people to continue this, though, right?
Well, I think there's massive success. I think I read somewhere it's like 174 companies listed, which are Chinese centric tech companies. Maybe it was like 1.8 trillion US dollars raised. And these are big companies, and these are well-run companies, etc. But like I said, I don't think these companies are going to be the companies. They may face other challenges with the China being tougher on tech companies and these other kind of things moving. I don't think the structure is the problem for these companies. What I'm really more interested in is if you're an investor in these companies and you can't do the IPO. So I don't think anyone's going to undo what's happened, but it's really, what do you do if you can't do that US IPO? And you can go to Hong Kong. Maybe there's lots of options, but these weren't the options that people were thinking about when they made the investment. So I'm curious to kind of discover from people, what do they want to do?
Yeah, I think the ones that are successful, obviously, we hear about them a lot, but the ones that are not, well, those are the ones that are kind of the ones that we're talking about. I think that's what we're getting here, Mark. So there was, obviously the frauds are just going to be straight up frauds, but there's going to be a lot of gray areas too, where it's just not going to work out for the IPO. So there's some examples here, but there's a lot that fall in the cracks. And I guess the topic that we're discussing today is how strong are those links with respect to some of the ones that don't reach that IPO dream.
Yeah, so I think the ones here, but I think that's the interesting thing. Like Sino-Forest is probably the first one. That was a long time ago. That was a forest company with no trees. So I actually met the guy. It was a bunch of Chinese Canadian guys. So lucky I didn't get involved in that, because we made luckily we're probably too expensive or something, but we met them early on. It was a bit surprising. Giga Media, I know the law firm, was trying to help the investors on that. So that's really the case, which I'm thinking could happen if there's non-alignment, is where the CEO or the founder just says, this is too difficult. I think I'm just going to operate this business and just take it and, cancel the contract. And then Luckin Coffee, it's still running around, I think, but it's probably an overstatement. So that's not really, look, I think the thing is, it's been a great success and a lot of people have made money. And if it's 170 plus companies and we've only come up with a small group, there are many more, no doubt. But again, I think there's this inherent fragility. So far as I know, when we first really looked at it was back in 2008 when they had that financial crisis. And I always thought a crisis would like clean things up and people would just, but nobody, as far as I knew, ever sued the lawyers, the accountants, the advisors, or investment banks. I don't know why not. I mean, people sue for everything. So it's always been a surprise to me, because I just would think if I would send somebody an email and say, look, I've got this great company. It's, let's say, it's in Mongolia. It's an internet company in Mongolia. Do you want it? But you don't invest in a Mongolian company. You invest in a Cayman company that owns a BVI company. The BVI company owns this wholly foreign-owned enterprise in Mongolia. The only other little problem is that that company can't operate in its business scope in Mongolia, but the real owner of the company has a family business which holds all the IP and the technology and the operational licenses, but there's a contract. I just can't imagine people would say, yeah, where do I send the check? So that's what I find very surprising about the whole thing. So I must be missing something. So I'm hoping people will explain it to me.
Well, it is a little bit worrisome when you put it that way, because how many companies could be affected? Well, it turns out it's grown quite a bit since those early days, Mark. I did a little bit of research. 248 companies on the UX exchange since middle of last year, compared to 170 2 years ago. So, I mean, growing. But look at the yellow and green circles. There were 30 in the first half of 30 IPOs in the first half of last year, only 4 in the second half. And this, I know you threw out some numbers before. It's 1.5 trillion in market cap now, but at its, I think this is at its peak, or maybe around that May 2021 date, but it was as high as $2.1 trillion on the exchanges. So this problem, which might have started, which was probably not such a big problem when these Chinese companies were not really big players in the exchanges, but it's grown a lot since then. So there's, I mean, just look at some of these heavy hitter names. I mean, Alibaba's on there, the JD. I mean, there's a lot of companies, and the thing about it that we've kind of trying to really hammer home here is that a lot of these companies do have access to a lot of data. So that the problem is not necessarily that these companies are just are not doing well themselves, but it's just that they're getting pulled from a different direction that might make them not compliant or a little bit hesitant to disclose that information. Anything you want to say on here, Mark?
Yeah, I think the thing there is, I mean, there's been more and more IPOs in the last few years, despite all that. But I think I didn't know these numbers, but that it slowed down from 30 to 4. It kind of shows the direction. And like I said, look, I don't think Alibaba's got a big issue, or JD or Baidu. I don't think any of these companies are going to face any issues on the structure. I think the question really is, if you don't have that, if 4 becomes 0, what do you
see my screen?
I can see main issues.
Okay, great. All right, sorry about that. So yeah, speaking of issues, here we're going to talk about some main issues. We've already kind of highlighted some of them as we were talking, but I think number one that we really need to get to, Mark, is the contract. And you just gave that example about you have a BVI company with a Cayman company that's holding, but it's all just held together with Scotch tape, right? It's Scotch tape and glue with some contracts here and there, but actually at the end of the day, the contracting entity doesn't even have the licenses. It just has a piece of paper. So what do you think about this issue?
So I think a lot of it's template. So I think there are, as far as I understand, there are kind of like market standard contracts. But again, these are kind of based on US concepts, etc. And so, when I did challenge one of the lawyers, just asking them, "No, what happens if it goes wrong?" The issue was, they said, "Oh, well, if after 5 years, then if it's not listed, then the founder, there's a redemption clause, and the founder has to pay back, and buy back the interest." And I'm just thinking, again, maybe if this was a company that was making furniture, maybe that would work. But these are all tech companies. They're burning money rather than have generating high revenues. And it's one of the reasons why they want to list is to get more money in so they can build more. So they can do like a Google. I'm sure Google wasn't profitable for a number of years. So that kind of redemption protection doesn't really work. I would think not. And then also, the enforcement of a contract within China, if the WFOE is controlled by the same person that owns the VIE, of course you can do things, and there have been cases where people have succeeded to some level, but it's all very difficult. So I just don't know if this has really been clearly enunciated to everybody who's made these investments.
Yeah, and then like we said, there are many issues here, and they're all pulling from different directions. And the other issue that we highlighted before is about data. And while it's not necessarily directly related to the exchanges, it is a big portion of a lot of the successes of some of the companies that have made big splashes in those markets. So, these are the issues that they would face from a China perspective. Mark, do you want to give us a little bit of background on this?
Yeah, so I think that's what I'm thinking now. The real issue is, so I think the audit problem will probably go away to a degree. I mean, there'll be some kind of common ground, because I think it's not like, I'm imagining as the world gets more back to normal, everybody will become a little bit more cooperative. So, I think, information flow will be, if we're talking about information flow, there's been a recent regulation draft just a few days ago, which said that core technology can be transferred. Whereas a few weeks before, it was in the first draft, it cannot be transferred. So I think, that kind of the audit issue will probably be, there'll be some solution. And I think the bigger issue, which only really came up for us maybe a year ago when they brought out the PIPL, the Personal Information Protection Law, it kind of highlighted that the Chinese authorities take the data of their citizens very seriously. So again, I think probably there'll be companies that will be able to do that cybersecurity check if the information is not too sensitive. It just is a lot of people's information, but it's not sensitive. But what could be sensitive is, maybe buying habits. It could be, for sure, biometrics. So if I use that example of the matchmaking type of app or something, and it's got lots of people's biometric, I can't see how those companies would ever get approved. But if it's some kind of AI company or something, which doesn't connect, particular, sensitive data, but then I think they'd probably undergo a cybersecurity check. If it's somebody who makes, scanning machines, or somebody that makes, spectrography machines that say that this is how, the thing's composed, those things you imagine could undergo a cybersecurity. But I think anything which is too consumer-based, it'll just have data. I mean, this is just my own personal opinion. It's not, anything worn out, but I think that's where probably a lot of the concern is about personal data, and then especially sensitive data, which is, kids data, biometric data, health data, financial data.
Yeah, I think it's interesting. I think for the first issue that we talked about, the contract enforcement, I mean, there's a lot of issues here, but it can be theoretically, I guess, kind of worked out from a very high level legal perspective. The data part, it seems to me like if you were an investor and you were going to invest in a Chinese tech company, for example, I mean, you would probably want to know the type of data, the types of data that they're collecting, and what is the effect on of Chinese regulation on that type of data prior to investing, because they might not be able to list if they're handling a lot of the more specific, like sensitive stuff. So it seems like some basic, this might be one of those things where it just starts becoming very basic DD, Mark, like you need to look at the data.
But it might also be in the prospectus, do the investment bankers look at the data? Is that going to be a red flag? Is it something which will block an IPO? Would it block an IPO in the US? Would it block an IPO in Hong Kong even? Because Hong Kong isn't exactly the same, but still there is sensitivity. Or if you're going to do a Chinese IPO or sell it to a strategic, I think it's just more about, this is a concern which I don't think many people saw coming until maybe 6 months ago. So, it's a relatively new thing. I just don't, know the people who are in the pipeline. Have they thought about it? Are they concerned about it? Have they got a plan to deal with it?
And this is the last issue that we wanted to highlight. So the one about the data is kind of like a indirect effect of investing and listing, but there are some Chinese regulations specifically addressing listing overseas. And Mark, one of the questions, I know that there's a lot of text here, but I think I might have cut some of it out. One of the questions from the chat was about SPACs, special purpose acquisition companies, and do they navigate the landscape differently? Are they regulated differently? I think in the context of this, Mark, maybe you just want to give us your thoughts on the new Chinese listing, overseas listing rules, and is there exceptions for SPACs or anything like that?
Yeah, so I don't think that will help. I think the whole dilemma is the dilemma. I think these are kind of actually helpful because it's going to be a bit more oversight whether that it does make sense what they're doing. I don't know if it really deals with the central problem of the founder potentially having too much power. And of course, in the last 30 years or whatever, those legitimate founders, their alignment was with the investors to do an IPO. It's they all made money that way. So I don't think the SPACs. And the issue is these Chinese tech companies, especially the consumer-facing ones. They're very China-centric. So even if you find a way to get around it, then if the regulator is not happy, it's easy for them to take action against you because these personal information rules have been tightened, the cybersecurity rules have been tightened, and if you look at the cybersecurity stuff, a lot of the stuff that's much more compliance-based are the consumer-facing companies. There's the auto data security laws, which is industrial, but that's different. That's more like if you read those laws, it's more industrial. It's more how you deal with the data, etc. Whereas the e-commerce platforms, they really have much more on the punishment side of things. Like this is how you cannot do things. And then if not, they can just defenestrate you. If they're not happy with you, they can, take you out of the app stores. They can close down your website. They can fine you. It's not like that. Very often people say, "Oh, we can use this loophole." I think in China very often a loophole is just when people say, "Well, you didn't understand what the law meant, and now we're going to crack down on you." So it's not like perhaps in the West where people think it was a smart maneuver. It actually means you're probably at more risk than you think.
Yeah. After this presentation, I will send everybody who registered on the Eventbrite a copy of this presentation, but I'll also put in there an article that we did, which gets into a lot more detail. And there's a paragraph in there that directly addresses SPACs. So to the person who's asking that question, you can read that as well. But I agree with Mark. I think it's the central issue of control, right? That whether it's through SPAC or whether it's through VIE, that's kind of the issue that is we're kind of honing on today. So with that said, Mark, we kind of want to give some of our thoughts on how things might play out given all of the moving parts here. And we have a couple different options for what one may do if they do find themselves in this situation where they are invested, but there is no hope for a US IPO. So first here, we have just go to other markets. Mark?
Yeah, so I think, this one, look, I really want to make it clear, this is not us prescribing stuff. This is just us with a piece of paper trying to work out, well, what do you do if you can't do the US IPO? US capital markets still the biggest in the world. US capital markets probably understand tech better than anybody else in the world. So I think, look, the ones which are strategic, and I think there's already been a few cases like semiconductor companies, they'll go back home and they'll go on the new China mainland exchange, like the new Star Exchange. We've got a bunch of videos on that. That's, raising big, relatively large amounts of money. And for the right kind of companies, I think, that will probably be But yeah, I don't know. We haven't looked at it in full detail, but the complexities of being a shareholder in a China listed entity, it's different from being in a US entity. I don't know. I mean, one would have to check this, but how liquid are the shares? Can you get the money out? Can you sell them easily as a foreign company? So that's one issue. I think probably the most popular idea is the Hong Kong idea. And I know our office in Hong Kong is very bullish on this. But yeah, Hong Kong as well. Yeah, it's obviously well functioning, very international, but it's not as deep as the US. And so I think the issue is how much could they absorb? How many pockets are there, of capital? Probably tech and education will go. Education has really been one which has faced a lot of challenges. So I think that's something. London, that might be because I'm here, but maybe for the smaller ones and for the tech companies or fintech, education, possibly consumer, things where the London Exchange understands it. And I think, it might be interesting, I think Hong Kong is interesting, but it's still very China. And a lot of these companies, if you look at someone like, ByteDance, with Douyin is the Chinese version and TikTok's the foreign version, maybe that wouldn't be enough for a Chinese company that says, I really want to be a global company. Because then if it's just, a Shanghai listing and a Hong Kong listing, you might feel, well, it's just, we're not really global. So I could imagine for the smaller tech companies, London, and as far as I know, I mean, I'm not an expert, it seems to be much easier to list than in the US. And then I guess the big one is go private. Will the founders will they have to maybe they'll buy it. Maybe they'll find Chinese private equity to buy those shares. But these are all difficult things, So when I discuss this with people, they will say, "Oh, we could do this, we could do that, or that." But these are not easy things to do. If you invested, $50 million in a company, and then you're in a fire sale, you feel that you have to sell. It's really, it's a different dynamic. So I think the issue here is these are the options we come up with. Maybe other people have got better options or more options, but I'm just trying to grapple with what will people do if they can't list. And as far as I can tell, not many people have really grappled with this yet. People are just still committed to hope. And hope is very often the last thing to die. So that's the issue.
I just want to point out there was one option in the chat about the D-share structures on the Scenics. I don't know if I'm saying that correctly, but the D-share structure might be something we have to look into it addresses the IPO investors not owning the core business. So I don't know. I think there might be some solutions coming from the markets too, which we should pay attention to.
Make a note, because I don't know about that one. But I think this is this is really the reason to do it, is not to say we have the solution. So anybody who's got any ideas, we would love to have a conversation, because it's an interesting point. This isn't really our core business, but I just wanted to start a conversation about it because I find it quite fascinating.
So here we have some examples. SMIC was they delisted from the New York Stock Exchange, and they're preparing for a star market listing. I think that's pretty interesting. Might be more in line with kind of a tech first in China policy. And then of course, there was a bigger one with secondary offerings in Hong Kong, like you mentioned, Mark. Alibaba, JD, NetEase, they all filed IPOs in Hong Kong. Of course, there was some lobbying by the other exchanges to try to woo these companies to list on there. So it seems like for some of the bigger companies, they have their pick of the litter. But some of the more up and coming companies that we are kind of generally talking about here, they could also look at the same exchanges as well, I assume.
Yeah.
Okay. So option 2, and I think this one is kind of a recent breakthrough for us on wrapping our heads around how to actually dismantle the VIE once you're already in there. And I think it's a pretty difficult challenge for most people who end up in this situation. But this is how we imagine one scenario could go through. Mark, could you walk us through this?
Yeah, I mean, just briefly, because I mean, I think this is just supposed to be high level, but I think really, if you're gonna, I mean, if you wanted to repair the core fragility, it really was that a lot of these tech companies, but that's actually also interesting. A lot of these tech companies never had to do a VIE structure. We saw some of these companies. I remember there was a pharmacy company, like a drugstore chain thing. And the restriction back then was like something like you couldn't have more than 30 or 40, and they only had like 10. So they didn't need a VIE, but they did a VIE anyway, because I think they just thought, well, that's what everyone does. But also, I don't know if they even thought of it, but gave the founder a lot more power, because he basically held all the licenses. So I just remember that. I wasn't involved in it, but I saw the prospectus. So I think, the core problem is for many of those companies, they need the VIE structure to hold the operational licenses, and in some cases the trademark. If it's like a publishing or media company. So if you're going to list in China, well, you can become a Chinese entity. So you can then dismantle it, increase it. You can do a lot of the things which are, theoretically possible for foreign companies, but very, very difficult. You can do your employee stock, option plans and all these things. And so I think, just there, you'll have to cancel those contracts, and then you'll have to clean it up. But then the China entity will be able to list in China. So I think people can have a look at that in more detail. But that's why I think it's interesting if we can work out a way for the foreign investors to have liquid availability to their investments. The Chinese option may be the best, because it's got the largest, capital reserves. People understand it, and people believe in the business. You can imagine it'll be a very successful listing.
Yeah, and I think the regulatory trend has also been to kind of increase the attractiveness for foreign investment in terms of capital markets. So it seems like there's a promising future for that avenue if one wants to dismantle the VIE and list locally in domestic market. The last option here, Mark, we have is a share transfer. Of course, we have here that the issue is finding a buyer, but if one does find one, how does this option solve?
Well, I mean, just get your money and you get out. I mean, I think there's been a lot of I mean, it's not exactly the same, but one case that there was that KUKA case, which is the German robotics company. And we've seen other cases. I think we talked about it before a bit about listing in China. So maybe we better work out how they do get their money out, because we've been promoting that concept. But KUKA, everybody wanted to get into the KUKA thing. So I think Medea ended up buying it, but there were a lot of private equity funds who would want to buy something like that company, and then connect it with some existing company or do a backdoor listing into it. So I think in this case, if it's a successful company, you'll have lots of private equity Chinese companies or strategic investors wanting to step in. I think like Geely does a lot of investments in startup technologies in China. So there's lots of people wanting to invest in it. But of course, it's different. If you've got pressure on you and you're in that kind of position, I think that's the first one. Then the problem is, if it's not a particularly attractive company, what do you do then? And that will be problematic, I think, because the redemption will be tough. Because if it's not sexy to Chinese private equity or a strategic investor, probably doesn't have much money. And where's the founder going to have the money? He's probably spent the money in the operations. So I think that's difficult. And then the liquidation, well, that's even less likely to bring you any money. I mean, if it's at those stakes. So I think these are the difficult. People say, oh, the investor might have this liquidation preference. Yeah, well, if there's nothing left, I mean, it doesn't matter what your preference is.
Yeah, I think the lesson that I'm gleaning from that is that one should just kind of get to know some of those local funds and local investors, so that an opportunity does come that you want to do a share transfer, it might be better to already have some connections in place rather than trying to find a buyer while you're having a fire sale. So uh, we we just have a summary slide here, but basically, I just want to reiterate that this is, thank you, and thanks for the questions in chat. This is kind of just our thought experiment. This is something that we've been thinking about for quite some time. We don't know how it's all going to play out, but we can see a little bit of interplay between even things that might not look directly related, like the cybersecurity and the data protection, all of those things, but they are pulling on the strings here. So we're just trying to figure out, what does it look like once it all unravels. But with that said, Mark, why don't you just take us home here?
Yeah, so I think that's a good summary. I think it's really happening. We've been waiting for it for a long time. Like you say, I don't think we're the experts in this, but having had the opportunity to speak to some of the other people, it's also quite surprising that the people I've talked to, a lot of them don't really understand the issues with the VIE or the technology. They know that technology companies are perhaps being affected in China, but I think there's not really an understanding of how it's happening or why it's happening, and how the regulators can make life difficult. So a lot of people have the more Western view of things and think it's more standalone, whereas in China there still is more discretion and a greater ability to take action, like we saw with the tutor businesses. That would be a very challenging business to be in. So I think it seems to me that the US is trying to constrain things a bit in a variety of ways, and this anti-China thing, it's still pretty strong. But I'm hoping it will recede as the world becomes more normal. But the last few days really have shown the world's probably not becoming more normal. Just as COVID is getting better, then crazy things start happening in Eastern Europe. And I think China's also responding to this. So there's a lot of complexity now with these things, like with sanctions. The Chinese also have different types of sanctions, and a lot of these sanctions, which are interesting, are in relation to tech. And so again, like you say, a lot of these things, it's not so easy to see exactly how it plays in. But if you're a tech company that's got patents for mobile technology, and China's the biggest market, but you can't take action to protect your licenses there because of new Chinese regulations that they can, cause problems for you, elsewhere. It's complicated. So it's more complicated than it's been before. And then I think, sorry.
No, I was just going to say, in addition to all of that, it's also the speed at which it happens, because I don't know the exact, let me just ask you the question. When the PIPL, the Personal Information Protection Law for China came out, was released, how long, what was the window before they actually, the companies had to comply with that? It was pretty short, wasn't it?
It was like about 2 months. I think it came out like 20th of August or something, and it came into effect on the 1st of November. But again, I think PIPL was similar to GDPR. If you're a foreign company, why weren't you treating Chinese consumers with the same level of respect as European consumers? And I think the people that face the greatest risk from PIPL is not like a fashion brand from the UK or a German cosmetics brand. It's really the big China tech companies, because they're the ones dealing in the masses of personal data. So I think these things are dynamic. I mean, I'd say probably the better one is the tutoring space. There were hints. To tell the truth, because there was a little nugget that it said that VIEs were outlawed in the education space maybe 4 or 5 years ago. So when we did look at education type projects, we always did mention that. There is not a similar law, as far as I know, in relation to, say, e-commerce or healthcare. It really was just education. But that tutor thing, it kind of came from out of nowhere, and just like, within days, it just, kind of decimated that business. So I think that, like you said, probably people, the instinct will be, to look for other places to list. So Hong Kong will be popular. The right kind of company will like to do it in China. London might pick up a few. Other places might pick up some few. But I think China's very well positioned to withstand these challenges. I think when the red chip listing craze began, it was like much more crazy stuff was happening back then. I think now, even if you look at things like Luckin Coffee or these things, there is a certain standard to do well, and they probably have governance, but maybe these structures are not well developed, or they're not perhaps suitable to deal with a non-alignment. And so, when the founder wants to do the IPO and the investors want to do the IPO, well, I guess everybody's working towards that IPO. If that stops, I guess people might have different ideas as to what the next step is.
Okay, well, I think the lesson here is there's a lot to do before you get into bed, and then there's a lot to do even more once you're trying to get out. So anyways, there's a lot to unpack here. If anyone has any thoughts or ideas on this subject, it's still kind of a it's kind of a hobby for us at this point to think about this, but we'd be interested to hear any of your thoughts. But with that said, though, everybody will get oh, there's one question here that just came in last second, Mark. What do you think about, we mentioned Hong Kong, we mentioned London. What do you think about Australia? Do you think Australia might have some opportunities here?
Yeah, I think, there were some listed companies. I think a lot of these listings by Chinese companies overseas, or these raises, it happened years ago when these Chinese companies were less ready for it, and there was a lot of sad stories. I'm not an expert on the ASX or whatever, but I imagine it's a relatively small market. But probably, that's why I think London might do okay with fintech, because the investors there understand fintech, they understand consumer. Probably Australia is good for certain lifestyle brands, mining companies, but they're not really the companies listing on NASDAQ either. So I think for ASX, it's probably for big tech companies. It probably wouldn't have the kind of depth of the capital to make it attractive.
Again, thank you everybody for the questions. Thanks, Mark, for your time. Everybody will get a copy of this presentation, as well as the article that we recently wrote, which gets into a lot more of the details and implications of some of the stuff that we were talking about. And of course, the video will be up on YouTube, so you'll also get a link to that. All right, well, that's about it, Mark.
Right, thanks, Sean, and
thanks
see you
everybody.
soon.
See you in Shanghai soon. Bye, guys.
Yeah.